All right, guys, Russell. All right, Russell 2000. This time, ticker atrc, Atricure. Don't know what they do, but they have they're below the 12-month moving average. Still inclining, so we're gonna have to go on the smaller time frames to start to see to time our entry where it could bounce up and good risk, low risk environments. But right now, this is embryonic, and I like it that way. Let's see what we got here. All right, so until it gapped up here and then just went down and sayonara. Too high, got far away from 12-month average. All those sellers saying, whoa, you're not going anywhere. So until price action closes back above that, closes back above this previous high, a lot of damage there. Again, why stick around when you have to overcome that? Unless you want to get these type of scenarios where these highs have been rinsed out through nice basing, nice stage 1, after that stage 4. It's always stage 2, 3, 4, 1, 2, 3. And if the 3, it's always 3 before 1. After a 2, it's always a 3. If the 3 doesn't convert to a 4, then you call it a 1. But other than that, a 3 is a 3, and you should expect a 4. But if it goes up, then that 3, you rename it a 1. Does that make sense? All right, I'll think about that. All right, so up and up it went, closed below 12-month moving average. It did it a few times here, pulled back, went back down. And after that, when it closed back above 12-month moving average, it would have been out. So let's see what we got on the weekly. Right before, I want to draw out my monthly defined support. Whoa, sorry. And here it is. I look for closes, right? Red closes, and that's where the market decided, no, you're not going to go any lower. And when it vacuums up, there's no red closes, so there's no natural support. But what I got here is a wall, previous resistance, turn support. So if I would expect a bounce, it would be all the way down at this level, right here. All right, Russell, let's bring up the template, the Russell template. So Stan Weinstein, 30 weeks, simple moving average, Ichimoku cloud. And we got the Mansfield relative strength indicator comparing it to the Russell. We want underperforming stocks in the Russell index. And here it is, starting to underperform. So like I said, we're just beginning. On the monthly chart, we're still going up. But when the few weeks that it was below, starting going down, was actually below 30-week average, and it's making a decline. So we got the red overlay, and it was already declining a little bit before, but because you weren't below the zero line, you weren't underperforming the Russell, it wasn't red. So the red is a couple of checks all combined to one, and it gives a nice visual representation of the stage. So green stage 2, see all the way here. And add that. Don't take that. That's pretty strong signal already in its own merit. Just this above an inclining 30-week average of overperforming the Russell or the SPX. That's pretty good. But we add more just to reduce whipsaws. We add the monthly closes. Make sure you're below an important support line or above an important resistance if you're playing the stage 2. We're looking for volume on those breakdown candles or breakout candles. We're looking to make sure there's no Ichimoku cloud defined resistance above or Ichimoku cloud defined support under. And that's what I'm noticing right here. So because we're early, still inclining 12-month average, we still have some support to go through. So this could actually bounce back up, suck up the price action. And this could very be a good scenario right here where we come and touch that declining 30-week average. Still not the best time to short, even if you're still below declining 30-week average, because you still have to go through that cloud. So the ideal best is to have a close below that 12-month that monthly chart defined support. Now it's turned resistance. It's helping you bounce back up out of the Ichimoku cloud below monthly defined support turn resistance. And now if ever it comes up here, your sell stop, you would put it right above that declining 30-week moving average. You would enter at the close of the week. That's starting to go back down. And then that's your risk. Position size not to lose more than 1% between those two levels. And you're in a downtrend. Lower highs. It's been doing lower highs for a while. Lower highs, lower highs, lower highs, downtrend. Until it stops doing that and then starts rolling back over above the 30-week average. You don't go long right away, but you inverse all these checks, you inverse that on the way back up. So we're a little early. It's kind of cool. We're going to get to check. It's not making new highs. It's having difficulty. So this is pretty much a wounded prey slowly bleeding out. But this, you don't want to get in too early because you're going to waste a few weeks and you're going to stress that it might go back up. Make sure it clears those two levels right here. That 2450 level. What could happen, it could close this week, end of the month, below. So if it closes right here out of the cloud, month and weekly candle, that's pretty sweet. You could take half a position here, but you're starting to get away from that 30-week average. So on the way down, where is my monthly defined? My next level of support. Oh, look at that mess. Look at all those low lines. Here would be my natural support. And look at that, creating a bigger pattern. Okay, so that could be kind of far, so it might hit some other type of support. Start defining some support along the way. And if it bounces back up right here, still far away from the 30-week average. So this scenario is going to be hard to play. The better one is hopefully it pulls back up and then you get to play it when it really tightens up close to that 30-week average, coiling, making tighter and tighter formation, and then bounces down. That would be an A++ setup. Don't chase. If it goes down and it didn't create the perfect opportunity for you to enter in a low risk environment, skip it, move on to the next. Don't force the trade. ATRC, guys, stage 4 in the making. And the more time, also the good clue that if it doesn't break down right now, the time that it spends going sideways below a declining 30-week moving average, it's also going to be going. I'm going to remove all drawing tools. It's going to stick around below a 12-month moving average, and it's going to start declining, going down, and then you'll have the weight of the higher trend. So embryonic, stage 3 on the monthly chart, stage 3 on the weekly chart, but starting to give signs of turning over that we might be entering a stage 4 on the weekly, and hopefully we'll get a stage 4 on the monthly chart at the same time. All right. Thanks for watching, guys. Ciao.